What's going on with the Federal Reserve right now? What's going on with interest rates? Are we looking at interest rates to continue to go up a little bit more? Or are they going to come down? In my opinion, the position of the Fed right now is we're going to see at least a quarter of a point come down, maybe a half a point come down. That is not going to change the world. It's not going to change anything in my environment whatsoever. Next year, they're talking about dropping at least 4 times, maybe a quarter point each time, so they may drop another % next year. From the real estate investing standpoint of what we do as commercial investors or what we do as professional investors, you know, we're not getting interest rates at 6% if that's where interest rates are. We're getting them at 6% plus probably another point, maybe 7% is what we're paying for the money. So 7% is better than 8%, but 7% is not something that's going to make enough of a move for me to go big into something else. Now, if I'm looking at interest rates and interest rates drop down to 7% and they look like they're going to continue to drop over the next year, and maybe they get down to 5%, I would probably go ahead and buy a piece of property or buy a house at 7%. I would let my numbers be a little bit lower for that period of time of a year, and then I would do a cash out refi or just a refi, maybe not even any cash out. But I would do a refi and refinance the house and get that note down, and then my cash flow will pick up. So by the end of that first year, if you refinance it and get the note down, that's going to be a little bit less money on your note. You might save a few $100s on a note. Then you turn around and you go up 3% on rent. So if that's $1,000 worth of rent, you're still going up, you know, somewhere between $30 and $50. You're going to go up on your rents on that house. So it's a little bit more money each time. So if in the environment we are right now, we may not get into things as quickly as we want to get into it and make the return that we want to make right off of the bat. But we can look at that and say, from a strategic standpoint, how do we get where we're making money off of this particular piece of property? So we may not make it all right now, but as long as we got a game plan, as long as we understand what the future holds for our real estate environment, and every one of us live in a different environment. In Nashville, everything's still good. I mean, our appreciation is still up there real close to 10%, if it's not 10%, you know, somewhere between 9 and 11 up in that area, depending on where you live. But we're still seeing good appreciation. We are seeing a lot of rent concessions. So I think I got 6 rentals in this area that I live in right here that are not rented right now, and we're offering concessions to move into the properties now. And one of the properties is a brand new property, but people just cannot afford it. Everybody's struggling. They can't buy their food. They can't go out and pay their utilities. They're struggling and everything, and they're figuring out that they have not figured out how to get through this environment of high rents. I had somebody ask, when did I think rents would come down? Rents are not coming down. I mean, we have to look at rental properties or investment properties. If you are an investor and you're wanting an 8% return on your cash on cash, then regardless what's going on, you want that 8% return on cash. So you can't buy a property for $300,000 and then rent it for $2,000 a month and make a profit. You can't. The numbers just don't work. So you have to go up on the rent. And you may say, well, I bought this property 5 years ago and only paid $100,000 for it, but it's worth $300,000 right now. That's a huge truth out there that a lot of people look at their investment and say, I'm still making money off of my investment. But the question is, as you put money in the market and you put money into appreciating assets, those assets get more and more valuable every year. As we're going out and we're saying we want 5% return or whatever it is, 8% return, I got a $200 positive cash flow on this piece of property. That's fine right there. Maybe you maintain that forever, $200. But technically, as that house goes up in value, that house, the rents should go up in value accordingly. If the house value goes up 5%, your rent should go up 5%. Because if you're going to buy a house, if I'm going to go buy a brand new house to rent, I got to make a profit on a brand new house. But if I got an older house that I can rent, the numbers still, I got to look at that house as my return on equity, not just my return on investment. That house has appreciated. Maybe that house is worth 50% more money, or over from 20 to 24 houses have just about doubled in value in most markets. So you're looking at that house, or 2019 maybe. The houses have doubled in value. The rent should have doubled in value also. Have they doubled in value? Not really, but they're working on that, and rents lag appreciation. So as your house, as your house appreciates in value, you're gonna look at that and say, okay, my house is appreciating in value, so what is the equity in the value, and I should be getting a return on equity. So we have shown this right here to everybody several times. And the rule of 72 is that you can take whatever your number is. If you're going to get 5% interest, you can take 5% interest, you can divide 5 into 72, and that'll tell you how many years it will take you to double your money. So this is a chart showing compound interest. So if you had 1 penny and you invested it and you was able to double it in one day, you would make 2 cents, then you doubled that on day number 3, 4 cents, day number 4, 8 cents, and so on and so forth. And all of that goes extremely slow. So you got your penny and you've only grown that penny to $5 on day number 10. Then you look at over here on day number 20 and you're at $5,200. So it doesn't grow real fast. But once you get over here to day number 21, you're now at 10,000. And before you get from day 21 to day 30, you're over $5 million. And that is return on equity. So if you're always just fighting for your return on investment, and you're not looking at your return on equity, then you really are not making what you think you're making. You may be making an 8% return on your investment, but if you're in a stock market, you make your return on your investment, and then as that investment grows, you make a return on that investment also. So that's the appreciation, basically, of the market that's going in, and you're able to compound that. So you got to look at doubling the value of that total portfolio. How long is it going to take you to do that? Don't just look at it as, what am I investing? What is it going to be 5 years from now? Don't live your life. Too many people live their life in the here and the now, and they're not looking at where is it going to be 5 years from now, where's it going to be 10 years from now. I've always lived my life 20 years down the road. Now I'm getting to be an old guy, so I got to step it back and maybe start living my life 5 years down the road and looking at things like that. So it's just different. But I want everybody to pay attention to that return on investment compared to return on equity, and what are interest rates going to do. I would think by this time next year we may be down 1.5%. Which would be pretty cool. I mean, that'd be a good start. Maybe we're only down 1%. It ain't gonna be a huge deal. It ain't gonna be a deal breaker. I mean, I've heard some people say that they could see the Fed making a huge adjustment to save the economy. I don't know. I have no idea what they're gonna do. I'm gonna say that I'm not gonna think that they're gonna drop rates to 3%. I don't think that's fixing to happen. I think they're gonna drop it 1/4 point, and they're gonna come down slowly, and eventually we will get back to where we were. If we get the 5%, for me, that's the perfect market. I'm very comfortable in the 5%. I don't think that our country does well at 3% interest rates. I don't think it does well really at 5% interest rates. It probably needs to be closer to 6 or 7% for everything to work like it needs to work. But if we got back down to 5, I would go turbo on investing and buy a lot more properties than what I'm buying right now.